Hey,
Ladies
did you
and
fix the?
gentlemen, good evening. Welcome to another edition of the Lambom Show. Today is Monday, September 29th. We are on the last but one day of the month of September. And today we are coming on for a special broadcast. And the broadcast for today and tomorrow is going to focus on one of the most important pieces of our lives that we often take for granted, that we have not paid attention to, or maybe have paid attention and not enough attention to. And the title of today's broadcast is Life Insurance 101. We're just going to understand the basics. 3 weeks ago, we started this series. We're supposed to run that progressively over the 4 weeks of September. But like with everything, life happens. And we did not want to miss out September without having something. So that is why we decided to do a back-to-back presentation. And last time we actually started talking about insurance, but from a different perspective, like just testing the waters and presuming many people who are financial experts, people who are experts in their fields, they really do not take time to go into this part of it. And we were able to explain that it's worrisome and it's something that we all should pay attention to. Today, we really want to do the basics, and that is why we entitled it Life Insurance 101. And the reason why we are doing it, and again, like I said, there are four things that are coalescing at this point. So, first, September is celebrated as Life Insurance Month. That's supposed to be the last piece for us to talk about. But it's also Prostate Cancer Awareness Month. And it is said prostate cancer is one of the most prominent, well, the second most prominent cancers amongst men. So this month of September, we're supposed to be creating an awareness about prostate cancer. Cancer kills. But if it's screened early and if you take care of it, I mean, there are lifestyles that you have to adjust to and make that. September is also National Suicide Prevention Awareness Month. So, again, we are trying to prevent people from committing suicide. And I'm saying not to have a life insurance policy is suicidal in its own way. And that is meant to be some figurative way of putting it. But beyond just Suicide Prevention Awareness Month, beyond Prostate Awareness Month, we also have September being celebrated as African Heritage Month. And from the 15th of September to the 15th of October, it is also something about Hispanic heritage. So when you put all three, African Heritage Month, Prostate Cancer Awareness Month, suicide, add to that mix, September is Life Insurance Awareness. I think life insurance gives you the coverage, it gives you the leverage to be able to take care of. That's something that will prevent you from committing suicide. That's something that's going to help you if you get prostate cancer. And many of us Africans, there are too many things that we rush for, we are looking for. And as part of this, also tomorrow, we are going to talk about the business of life insurance. How do you generate wealth? And again, with us, we are glad to have Mr. Pius. Welcome back.
Thank you, Lambert. Great to be here.
So let's knock it off. I mean, again, we talked about a couple of things. Why life insurance? What is so special about life insurance that we should start with that?
Uh, I'm glad you asked. That's a great way to segue into what we're going to be talking about today. But before I answer your question, last time we kind of stayed, as you were saying in your introduction, along the lines of financial literacy and really just understanding how money works, some tools around wealth creation, and the role of life insurance in our as a tool of building your financial house, for lack of a better way of putting it, or in financial planning. So today we're going to talk more, as you said, in general, about some aspects of life insurance, get people a little bit comfortable with the topic. It's not something that families discuss at the kitchen table or people want to talk about, especially people from our community. They really don't like talking about their mortality, but nothing could be further from the truth. So, life insurance, to answer your question, is the foundational tool for building your financial house. So, look at it this way: the laws of the United States, with regards to owning assets, or maybe even taking assets or things of importance or value from other people, they want to require that you protect their liability that is being handed to you, or that asset rather that's being handed to you in case something were to happen. So we have laws for driving, for having insurance on our cars. We are required to have insurance on our homes because the system understands that if I have something of value and I'm going to hand it to you, Lambert, I want to make sure that uh, I'm not just handing it to you, but I'm ensuring that if something were to happen to you, if you disappeared with my asset, if you damaged my asset, that I can have recourse, that I can go back out and replace that asset, not out of my pocket, but with the protection that I have for it. It's no different from warranties and stuff like that. Most of us are comfortable with dealing with insurance when it comes to that. You don't go into a store and buy something of value and don't consider putting warranty on it unless you're foolhardy. Okay? You don't buy a home for $500,000 and you don't protect it. The reason this month is so pivotal is that while we lay that level of importance and seriousness to tangible assets, we don't look at ourselves in that same way. So protecting yourself, and I'm going to talk about some other benefits, but life insurance is you saying that I am my family's most important asset. The reason they have food on the table, they have a roof over their head, they have a livelihood is because of my ability to provide those things. And so protecting myself ensures that if something were to happen to me, death, disability, critical illness, my family will not lose that financial responsibility that I have. And like it or not, we all have a dollar sign on our heads, and we'll talk about being not just being aware of that. You have to have protection. You have to know what your insurable need is, what that financial responsibility is for your family, but just the awareness that I'm an asset to my family and probably the most important asset that they have. So I need to protect myself. And that's why we must start with life insurance. Your financial house is on shaky ground if the first thing that you put in place is not life insurance. Basically, what you're saying is if anything happens, hell with it. You understand? My family is on their own. My assets can go anywhere. And it's not just ourselves that we have to protect. We protect ourselves because we see ourselves as our family's most important asset, but we must protect the family's other assets, like financial assets. We must protect our home. We must protect our businesses. We must protect our, our, our financial future, and that's why life insurance is so critical. And the reason it's September is the month designated for that awareness is because on September 11th, 2001, uh, you know, we face a disaster, the magnitude not having been seen since World War II in this country. And most of the people, a lot of the people left families really, really in disarray because of that. So
So I think that's very important, and the one thing that I think you point out is the fact that we place insurance on things for which we give value, isn't it? So
correct.
you get a car insurance. You get a home, you get a home insurance. Paradoxically, the most important asset that we have, I mean, this life insurance does not ensure that you will not die, just as a car insurance is not that you it is preventing you from getting an accident, isn't it? But is when that
Correct.
happens, how what happens next? So, in other words, to use a banal analogies like the morning after pill, isn't it? What happens the morning after? But I think it's crucial, especially because we talked about the African Heritage Month, that
Yes.
most of us come from countries where these things are not really people don't pay attention because the bread and butter issues are what we
Worry
take.
about.
Yes. So I think it's crucial that having come here, I mean, even without us looking at the business side of it yet, at basic level, you put a premium on the life that you are living by getting a life insurance policy, so that it
Correct.
takes care of things when things are not. I mean, if you die and all that. So I think that's a good way to start off. But I mean, there are 1,001 policies because I keep having people writing emails, sending me emails. I'm a Columbia grad, so we have one. People keep saying I have a car insurance, home insurance. They are also saying do a life insurance. So, how do you go about determining what kind of policy to get into?
So that's another great question, Lambert. So it's very simple. Before you even start determining what type of policy you should consider for your family, you first of all have to start by finding out what your dollar sign is, what your insurable need is, what you're worth, and we're gonna discuss a little bit some of the benefits and of just going out and buying a life insurance policy. Okay, so there are four key things that most people worry about. Okay, they worry about their debt. Uh, you know, growing up, you know the saying that a dead man doesn't pay taxes, right?
Mm-hmm.
Apparently, that's not true in North America. It doesn't matter. In fact, you pay more taxes dead than alive because you're not there to argue. So you have to think about your debt. You have to think about your income. That income is that foremost thing that you want to protect. You want to ensure that your family continues to have your income coming in, and you want to determine for how long. The rule of thumb in the industry is 10 years. So if you want to go out and buy life insurance, you want to protect your income for how long? It's just like you want to protect your home for how long? For how much? If you have a $500,000 home, you cannot go buy insurance for 100,000. That may just be the kitchen and the garage or something you're basically protecting. So you have to look at the balance on your mortgage. How much do you owe on your mortgage? And you want to make sure that part of your life insurance policy ensures that your home is paid off if something were to happen, so that your family doesn't have to worry about, you know, where to live. And so, and then the last thing is if you have children, one of the things we will do is put them to college, right? And higher education is not free in North America. So, four things that worry most families is who's going to take care of their debt, where's the income going to come from, and for how long? Are they going to be able to pay off their debt, their mortgage, and
Okay.
are they going to be able to put kids through college if one of the breadwinners' income is taken away? So that is the first thing that you must do. Find out what your insurable need. How much debt do you owe? What is your income for the next 10 years? What is the balance on your mortgage? And what schools, what colleges would your kids go to? How much will they cost by the time they go to that college? That would give you an idea of what we call your insurable need. For most of us, the bad news is when we sit down to do this, Lambert, our need is going to be way more than we can really afford.
Okay.
Because for most of us, we've put this off and we've not talked about it. Once we have that number, then we can start the research or start looking for what type of policy is the right policy for my family. Okay. And then you start delving into the different types. And again, the type is very important because um, for a lot of us, we try to buy the price, not the value. Okay, and insurance is one of the things. We're talking about Life Insurance Awareness Month. There's no discount on life insurance this month. In fact, the only discount that you have is that go out and get it today if you don't have it, because today is the only day you're going to get it the cheapest. Tomorrow it's going to be more expensive. Okay, so and in this is a business where there are no free lunches. You pay for what you get. So it is very important to understand which type of policy is the best for your family. It may be because of the needs that you have. It may be because of your affordability. Okay, and then so think about any other financial product that you have. If you went out and opened a bank account, for example, what would be the reason for you to open a bank account? Maybe to process your paycheck, to be able to pay your landlord and pay bills through that bank account, right? You are buying into a service in the bank for which you will pay for them rendering you the service of the financial transactions that you do. If you bought an investment policy, investment account, a mutual fund, some stocks, you're buying an investment in which there are inherent risks, there are gains and stuff like that, and you have to understand. It is very important, just in the same way, to understand what relationship, how am I crafting this product, and what is in it for my family, and that should be the the reason how that policy delivers the needs that my family needs at that particular time. Then you pick a particular policy. Now, just because you asked, and I know you have a follow up question, there are two main types of insurance: temporary, which is like renting an apartment, and permanent, which you have for your whole life. So, the question I want to ask our audience is what would be the right mindset, or what would be a good mindset to have when buying life insurance for a portion of your life or for your entire life? And that could be the reason why you choose a permanent product or a temporary product. Okay. So going further, the temporary product does not have any other benefit apart from delivering a death benefit. So it's just like you used the morning after analogy earlier. So let me use a pregnancy analogy. So you don't use the morning after pill, right? And you get pregnant, you have to carry the pregnancy to term. So in 9 months, you will deliver. That's just exactly how a term policy works. You could buy it for 5 years, for 10 years, for 20 years, or for 30 years. And in 30 years, if you don't die, that policy ceases to exist. The term ends, okay? Or you deliver. Now, the permanent policy, it's designed to carry you throughout life expectancy or for your entire life. So if you want to consider, if you are thinking, I want to be protected for my entire life, I don't just want to be protected for 30 years. Uh, then maybe you should consider a permanent policy. Now, that will bring us to another aspect, which is equally important. What type of permanent policy? And as permanent policies go, there are several different ones.
So, I mean, again, packed in too much in there, and I'm glad. First of all, you talked about the insurable value, and that's
feel free,
important.
feel free to stop me anytime, okay? Because
Good,
I get to be
yeah.
long-winded, as you can see.
No, I mean it is good that I'm also a student, so I tend to lose focus because I'm also learning, isn't it? So again, you talked about the insurable. You have to look at your insurable value, and there are four things you are looking at, isn't it?
Yes,
When you want to get an insurance policy, but you also have to look at you balance up the value with affordability. And that
correct.
is when you are now talking about should I go in for a temporary insurance policy, or should I go for and what is the other one called?
Permanent.
Permanent. And again, no value to the temporary thing, which is what you hear many people
Yeah.
putting
So,
around.
well, there is value,
Oh, okay.
and there is value in. So let me just take it a step back. No policy is a bad policy. It may just not be the right policy for your circumstances. If you have some protection, we don't know what is going to happen tomorrow. So I'm not saying, uh, you know, you should always look at the permanent and not the temporary. You know, affordability may be directing you to get something temporary, okay? Because you that's what you can afford. So the mindset and the purposes for this awareness is to raise the mindset to the fact that we could die tomorrow and our families could be in some financial distress, or we could live very long and still be in some financial distress down the road. What are we doing to make sure that whatever happens, whether we die too soon or we live too long, that we are protected and that our families are protected? That mindset, even if you took a temporary product today, you would have the mindset to convert that to a permanent product when affordability becomes a non-issue.
So,
So we can talk about the different types if you want, really briefly, and again, you can stop me.
yeah, sorry, I was just getting I was just trying to get into this to see the comment section, but it was going
Okay, all right,
but yeah, but that's fine. So
yeah,
again, just to recap, we have talked about why it's important to get life insurance. If you can get insurance on your car, on your home, why not life, isn't it?
on,
The other
well, you
thing,
should get it on yourself first.
good. So again, then we just talked about the different types, and we're
Mhm.
like temporary and permanent. And so now we want to go into say, give us, because is there a possibility of having both with different companies? Is there an advantage with that?
So I think it goes back to your question of determining what type, right? And then how much can I have, or how much should I have? Can you be overinsured? You can obviously have many different types of policies. In fact, uh, one of the one of the things that in the industry we have we learn is that the 1% or the 5% or maybe even 10% wealthy in America have a lot of money packed into life insurance. Why? Because you can have many different policies on yourself. You can have many different types for many different reasons. So we talked about term being something that you may be pushed to because of affordability. Term is very cheap because you just pay for the death benefit. If you don't pay tomorrow, you don't have a policy. So they don't really care about anything. They just care that your premium is coming in, and they hope that you don't die till the term runs out. They're in it to make money. So if affordability is the affordability may not only be the thing that drives you to a term policy, it may be the reason you want a term policy is to cover a financial risk that is temporary. For example, um, most people only get to buy life insurance when they go to buy a home, and they get sold the life insurance because the lender wants them to show that they have a life insurance policy. And because most people don't want to spend any more, they're already buying a home and paying costs, they buy a cheap term life policy for the value of that home. And usually it's something called a decreasing term. So they now have a life insurance policy, but it is for that house and it is for 30 years because they plan to pay their mortgage off in 30 years. So they may think that, and they know, it's just that they don't put that level of importance to covering themselves. They just want to cover the house because the lender wants to show that this loan is protected with life insurance. They don't want the owner to pass away and then the house forecloses. So a term may be a good product because you buy it for that specific reason for your mortgage. But you may have a permanent, or you may even have another term for those other things that we talked about, for your income, for your debt, and for your kids' education. Or you may choose to have a permanent policy for those other things, and you have a term for some specific thing. We could be in business together, and I don't know, maybe we'll be in business for the next 5 or 10 years, and you bring some degree of expertise. We have a financial value to it, or maybe you bring some level of capital investment, and we could have policies on one another because if something were to happen to me, you would lose whatever financial responsibilities that I bring to the business. So we could a term policy is ideal because our business relationship may not be a lifelong thing. So what you are using it for will also be a determining factor for which type you actually use. In this case is what that I'm using permanent or sorry temporary life insurance will be appropriate if it's a temporary situation that we want to protect. Now, if you're looking at long term, you're looking at other things. Your life expectancy, you may be thinking about adding features, which is something that we'll talk about. The other ways that life insurance can be of great help, you know, to the owner. It may not just be for a death benefit. When the difference between the temporary and the permanent, it's the additional features that you can have with that covers you too for your whole life. You there?
What is the issue with the temporary? What is the issue with the temporary benefit? Because it seems as if it's really not encouraged. But again, I think as you just explained, it has to do with means, affordability, isn't it? That's why, or somebody is going to get a home and they need something, you buy that real quick. So I think from what I'm here, am I right to suggest that if you want to start off with a temporary policy, then move up to a permanent, and that needs to be more intentional than just aspirational. Ultimately, where you want to be is to have a permanent life insurance policy. That's what we're establishing here. But you could have that together with a temporary policy, a mixture, a combination of that, depending on what the circumstances. Am I getting that correct?
You're right, and let me add that you're right. So there's a reason we established at the beginning that it is a foundational product, right? So uh, we call it your financial foundation should start with protection. That's what we say. So in and we do workshops on this, which we'll talk about, I guess, tomorrow. So when you set that financial foundation, the key reason is to have the financial foundation, the security that if something happens to me, the breadwinner, okay, that my family is secure. I'm protecting myself. We're talking about life insurance. Now, there are other reasons that you could have business relationships, large purchases, investment deals, whatever. Okay. That the key reason that we're doing this for awareness is establishing and protecting my financial responsibility to my family and being able to determine which where should I go to do this? Do I use a temporary product? And in this case, my personal opinion is that it's something that anyone should consider with their entire life in mind, not just a portion of their life. So if I want to protect my financial responsibilities to my family, I want to do it for my entire lifespan. Okay, even though there's a school of thought that say, when your kids are grown and adults of their own, you really don't need all that protection. When your home is paid off, you don't need that protection. Or when you've paid off stuff or you've saved up enough cash, you don't need insurance anymore. There's a school of thought that uh, preaches that uh, concept or that mindset out there. I personally don't think it's a smart way to look at it. So, but to your point, you could have multiple policies for different reasons. So if I'm buying to protect my family, I want to look at something more permanent. If I'm buying because I just want to protect my mortgage, I could look at something temporary. But this is the question, Lambert, that I ask most people that are worry about why should I continue to have life insurance for my mortgage even after I've paid off my mortgage? What if your house burns down after you finish paying it off and you just discontinued your mortgage insurance? How do you build back from scratch? You have to use your own resources. So that the concept of insurance is transferring the risk of me losing something and having to cough it up myself to the insurance company. So for as long as you have your home, you want to make sure that if it burns down, you don't have to cough up the money to rebuild out of your funds. Okay. So it's something that until you transfer that asset to somebody else, you want to have some form of protection in it. So even in that particular situation, you always want to look long term. So yes, my encouragement is have a whole life, your entire life in mind when considering what to use. Even if you start with a term, have in mind to convert to a permanent, because there are a lot of things that could happen down the road, and we'll talk about that benefits of having life insurance that your life insurance could actually help you resolve even while you're alive. So if you get a temporary one and that time comes and it's no longer enforced, you may still have severe or serious financial challenges.
I want to deviate out just a little bit, just to maybe get onto something. I mean, is it? Maybe I should use that tomorrow. But I think it's important to talk about it now because I often hear people say that somebody has lost their life, they have killed somebody because they enjoyed the person's insurance policy. Is that because they want the benefit, or is it because the insurance is actually a wealth creating thing? And I think it's something that maybe it is a good thing to talk about now, especially because these stories are amongst us Africans.
So that is when we talked earlier, we talked about the myths of life insurance. One of the reasons it's not a popular subject for discussion, especially amongst immigrant communities like ours, is just because of the myths that you know surround it. And one of the myths is that I don't want my spouse to kill me because of life insurance, so I'm not gonna get it. You know, um, I, I'll just go out on a limb and say anybody that has that mindset, just go back and show me a case that actually happened where somebody got killed for their policy and it got paid out. I think in the last 100 years you will not find a single one. But myths are pretty strong and control folks. So again, it is something that we have to educate the mindset. Do I really care about who my wife gets with if I'm not there tomorrow? I actually care about who gets to be with my kids. And I don't want that person to abuse my kids because my wife had to go be with them because I left them nothing. And so my kids are going to grow up abused. Even she's going to get abused because she's trying to put a roof over my kid's head, and so she go tags on with a guy. You understand? And when you look at it, it's the greatest act of love that anybody could do if you really love your family. Make sure that they are protected because you don't know if you're going to come back home when you get out in the morning. You understand? And the only thing that can give a right thinking person some comfort if you're out is that if I don't make it home today, they're going to be fine. They're going to have some money to continue and determine life the best way for them. So it is just the re-education and the rewiring in our minds, and there are a lot of things that surround and impact that. So I tell folks, if you care about your family, protect them. You don't have to worry about anybody. Okay, and of course, I want her to be able to pick a guy that she actually wants. Choose somebody because she wants that person, not because she needs the person. So
I think that's a very important. I mean, I personally never thought about it because we really worry as to what happens after death as if we have control over that.
absolutely
Zero
not. We
control.
don't. Yeah.
Yes. And so it really doesn't matter. But I think,
There's we can have control though. So it's funny that you raised that. So having life insurance actually puts some control in your hand from beyond the grave because you could set it up to pay out how you want, and that's exactly how it's going to pay out. You could decide that, okay, I want her to have the whole $1 million, or I just want her to have enough to pay the bills for the next 10 years and then do whatever. So you can't, it's the best way to have control. If you worry about her being with somebody else or him being with somebody else, just make sure that you don't have them get the lump sum. You structure it so that they get, periodic payments so they can their excesses can be curbed if you worry about that. But jokes aside, those are the myths that have held us back into using one of the most dynamic and most important financial planning tools that could be available to us right here. And let me just add this, Lambert, is the easiest way any one of us can create an estate instantly. So with 20 bucks, with $20, you could go out today and create a $500,000 estate in a term life policy, for example. For the next 30 years, if something were to happen to you, that is what you would leave behind. So if you don't have an estate, if you don't have anything, with very little money through life insurance, you can create an estate. And before we run out of time, I would like to cover some of the benefits that are beyond. So right now we've only talked about life insurance in terms of paying out the death benefit to protect our family. If you would, I would like to touch on some benefits to you while you're alive. So I don't know if we have screen sharing capabilities, but think about this, right? Um, Everybody uses a smartphone nowadays. I'm sure you could remember the time when you had a BlackBerry. And if you think hard enough, you could remember a time when you had a Nokia flip phone, and that was the coolest thing in the world, you know. And you think back a little harder, you had one of those brick ones that looked like this, you know.
like
So
Kumba Bread.
so that's exactly how these products have evolved over time. So today, life insurance policies today are, some of the most dynamic and uh, tools to have for your financial planning, because they don't only benefit you when you die. They in permanent policies build cash value, and the right kind of permanent policy could actually build enough cash value to supplement your retirement or take care of some significant financial commitments in the future. Now, cash value in life insurance has favorable tax treatment. This is coded in the IRS tax code. I'm not just saying that. At Section 7702 of the IRS tax code describes how cash value in life insurance can be accessed in a tax-free manner. Okay? The death benefit portion of life insurance is also tax-free. So think about this. As you're planning in the future, do you want to plan to keep on paying taxes to the day you die, or do you want to have some planning to reduce and maybe even wipe out your tax liability in the future? Life insurance is one of the great ways to create tax-free wealth in the future. Not just what you will pass is tax-free, but the cash value in it is also going to be accessed in a tax-free way. Okay, so accountants that are on here may be shaking their heads like there's no such thing, Pius. Yeah, well, there is. Uh, the other thing is today we have what are called living benefits. So, Lambert, if I have $1 million policy and tomorrow I'm in a car wreck and I'm paralyzed, I'm not dead, but what good can my life insurance do for my family? I may not be able to go to work or generate income, but I have $1 million policy. What good is that? Or I may be 70 years old and I need to be checked into a nursing home because I need long-term care. I'm not dead yet, but I have $1 million policy. What good is that to my family? They will still have to cough up money to pay for my care. What if I develop cancer or one of those crazy diseases, Alzheimer's, you know, uh, uh, heart problems, diabetes, and I need to be on dialysis or something like that, or I lose my mind, Parkinson's, whatever. So I will still be alive, needing care and money to take care of myself, but I have $1 million policy. What benefit is that? So nowadays, you could actually structure what we call living benefits into a life insurance policy so that your death benefit, that $1 million, is not only there for the day you die. If you get critically ill, terminally ill, chronically ill, or you need long term care, you can access that $1 million and actually use while you're alive. And one of the things that our community gets is people getting sick, families struggling financial loss because of sickness, and bankruptcies. The number one cause of bankruptcies in America is still medical bills today. So if you went into hospital for a simple procedure, operation, and you spend 2 nights in any hospital in North America, in the United States, and step out, your bill is not going to be less than $40,000. And that's 2 nights, maybe a small procedure that you have to go through. What if you were diagnosed with cancer or you had to do uh, a bypass surgery or something like that? You know, heart surgery is $150,000. That's just, you know, starting point. So your policy, well designed, well thought out, and well chosen, could actually not just be a death benefit for somebody else after you're gone, it could be for you. So for the people thinking that this is a myth, and I don't want to do it because I don't want somebody to benefit from it, do it for yourself, because you could be the guy drawing out of that because you know you need long-term care, you're terminally ill, or you need to pay for some critical illness. So those are some key things that I just wanted to take a few minutes to highlight so that people start understanding that it is not only about leaving a death benefit, it's also creating living benefits for you, the owner of the policy.
So again, I think just for people, what does that? Is your premium going to go up? Is something going to increase if you go in because it's like you withdrawing money? You put in equity in your home and you pull that out and all that good stuff. But it's
That
important to understand that even within your life insurance policy, there's a possibility of you cashing out while you have some emergencies and all that. If that is what you're saying, and how does
yeah,
that work?
absolutely. So it's a great question. So yeah, it's kind of like cashing out the equity on your house, except that you are cashing out the equity on your house from yourself. Okay, so you're not cashing out the equity on your house and then you're still on the hook with the bank, right? So uh, these living benefits, once you file a claim on a policy, a claim has been filed. One of the things that happens is if it's a terminal illness situation, you're gonna die anyway. So uh, you will just use the money till whenever you're no longer here, and then the difference will be paid as a death benefit, right? Or let's say you are critically ill. Let's say I was in an accident and I had to go through multiple surgeries, rehabilitation. 6 months later, I'm back up on my feet and ready to 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 do things normally again, work and all. But during those 6 months, I needed $50,000 because maybe I couldn't work, so there was no income coming in. I could go into my $1 million policy and pull out $50,000, or maybe I needed to pay for some more medical expenses because my insurance maxed out or whatever. I could go in there and get money to pay hospital bills and supplement my income. And once I'm back on my feet again, I just roll with it. They will just subtract whatever I took from the death benefit amount. Okay, this we're not talking about the cash value in your policy. That's totally separate. We're talking about the death benefit part, acting as a living benefit to you, the owner of the policy, or the insured on the policy. So the cash value is different. This in the permanent policy is the money that grows over time as you bring in premiums into the policy. Okay. Now, depending on which type you use, the cash accumulation could be quite significant, or it could just be just enough to sustain the policy through your life expectancy. Now, if you use a policy that has an aggressive cash accumulation strategy, you could actually use that as a source of retirement income because you could build the equivalent of your death benefit in cash in the policy. And because it has favorable tax treatment, you are able to take that money and use tax free while you are alive. So it could be a great way to supplement one's income and not have to worry about taxes. And there are a lot of experts. If you, I mean, anybody here could YouTube Ed Slot. There are a lot of guys out there that talk about some of the benefits of using cash value or permanent life insurance with cash value to build wealth, to protect the wealth, to keep it from taxes, and be able to transfer all of that tax free. So it's it's actually, in my opinion, just as important as having the policy for yourself, having the one that could give you uh, all the living benefits, generate significant cash value for you during your lifetime, and give you access to that money tax, with some tax advantages.
So there's something we have not talked about, which we should get into because again, I think it's
Okay.
one of those myths, and it's about age.
Okay.
What is a good time to buy? How old? Because some of us are already on the other side. So what are the
And
considerations?
another great question, and it's one of those things that I think every one of us procrastinates and we put off. We put off because there's something else we're doing in life that seems to be more important. Uh, we we probably don't think we can afford it yet. We just don't care, or we really don't believe yet. We don't have the time. People are too busy to sit down and talk. Maybe you get the one you want is uh, not, it's too expensive, so you don't buy a cheap term because you want to wait until you can afford a permanent policy. The best time to buy is today if you don't have. Why? Because um, you may not be insurable tomorrow. To be able to qualify for life insurance, it's not one of those things that you could just go pick up off the shelf anytime you want. So as we grow older, there's a good chance that we will become uninsurable. We'll have some illness or disease, or that it may be expensive. So it's very important to start early. Uh, get it today. It's the best day you could get it. It's the best day you could get it at the cheapest. And it's not just getting it; it's also getting the right one and knowing exactly what your number is, so that you could strive to hit that number. Because you may want to get into something today that's not really what you you need, but you need some protection, and you grow it as time goes on. So age is very important. The older you get, the more expensive it's going to be, or maybe impossible for you to get. And just because you asked, I know your follow-up question is, so how early should we start? Should we do kids and stuff like that? uh yeah, one of the other myths I get out there is, why would I protect children and stuff like that? Kids' life expectancy in North America, it's very, very high. So I'll let them just do it as adults. One of the advantages starting with kids is that you give them a head start. If you design a good permanent product, you give them a head start to build significant savings over time. And when they're adults and out of the house, they could take their policies and continue it, or they could pull the cash value for down payment for their first car, pay off some student loan debt, down payment for a house. But one of the most important things that you're giving them is, you are getting them insured at a time when they don't need any medical exam. So kids, there's no underwriting for kids. You send the application, they are minor, they just look at the doctor's report, it's approved just like that. So you give them a head start. Uh, Kids could develop medical problems, and as adults may not be able to qualify, and nobody prays for it, but anything could happen. And a loss to a family is still a loss, and whether it's an adult or a kid that gets into a healthcare situation or a life situation, that family may be incapacitated. They may not be able to work, they may need some time off. What happens? You don't want a parent that just lost the kid, and we have this around the community, right? Like every year in North America, somebody from our community drowns in the pool, gets shot at the job, dies in a car crash or some freak accident like that. So it doesn't only happen to other people. So you don't want a mom to have to get up and go to work tomorrow when they really can't go to work because they have bills to pay and they just lost the child. So uh, again, uh, you could, if you could start your kids off with something uh, small, give them a head start. As adults, they could grow it to whatever they want. But for adults 18 and over, get some protection today. It's the 29th. Tomorrow is the last day. The sale ends today. Just kidding.
So again, well, I think there's just we have like we could go through the entire package, the entire insurance thing, and still have too much to pack into. And I think that even within the hour, there are too many things we were going to be talking about. It's almost 5 minutes to the hour. But I really wanted us, again, just a recap. We talked about the importance, benefits, and the most important part for me today has been the fact that the life insurance policy you take out is not something that is only meant to give out a death benefit, but you can also have living benefits while going on with that. And the term is always, I mean, you use it for different things, but you move towards a permanent policy. That's always great. And we have also said age matters. You can, and I love the answer you gave. When is a good time to buy insurance? Today. Okay, it doesn't matter your age and all that, is you're going to factor all that into it. But also with kids, because you have kids coming up. Those of us who, you know, started late, we now have to start bringing along our kids and start preparing for them because they're about to go to college and all that. You have to pull all that together. And today was just meant to give us that basic introduction as to the importance of this, when is the best time to buy and all that. I just want to say something. Within our community, there is, we have designed, African community has designed its own, call it life insurance policy, you know, but that really doesn't respect the norms of what it's supposed to be. Because if you look at it, I mean, I'm talking about Saji, for example. That's the one that comes to mind. And that's just people pulling together. And because you have a large pool who are not dying that soon, isn't it? That is how they're able to pay out some amount of money. But the thing for us here is insurance is supposed to be
I don't know
both
what
for the living and then for the future, isn't it? You're looking at it long term. So my question to you is simple. Somebody who is struggling with whether to get into a local arrangement like Saji and picking up an insurance policy with Transamerica, for example, what is your advice to that person?
again. I wish I had screen sharing capabilities. So again, we are using um, Saji is good. It's something that would be perfect back home in Cameroon and give people the ability to bury their dead without remittances from families abroad, or give them a sense of starting to build a life insurance kind of program back home. Uh, Here, it works. It makes sense for a lot of people for the simple reason that we have a lot of older parents here who may not be able to qualify for life insurance, and you know these families don't really care to do enough research to see if they can get some final expense. Uh, the cost is what drives people, and the fact that okay, there is a big pool. But there's a name for what that is in insurance, fraternal companies, where people come band together in a pool for the purposes of creating insurance. They don't pay premiums, but when one of the member in the pool dies, everybody pays a premium. And that's what Saji is. So when a Saji member dies, everybody pays their premium that month, and that premium goes to the death benefit of that person. They just have to, I guess, legalize it if they haven't, to make it a fraternal company, and it'll be fine. So there's really nothing wrong with it. The thing I find a little bit troubling with it is that a lot of people that I know uh, use it as if it's the only thing that's available, when it should be a solution of last resort in an environment where we have all kinds of tools and all kinds of products. We have the infrastructure to be able to have something that um, is is more legally binding. If the organizers of Saji vanish tomorrow, it's going to be I guess, reconstituted, and everybody's going to be left hanging. I don't know if they're going to get legal recourse, but we live in America, and one of the things that you always want to have is insurance, right? Uh, it, that's the only issue that I'll have. But as somebody in the industry that educates people on how to make these arrangements, if Saji is the only thing you can afford, by all means get it. But also explore the opportunities that are out there for you to get something a little bit more that could pay out more or could give you some more benefits. There are final expense products out there that do not only just pay out a death benefit, but they also provide other services that people may need when they have death in the family, counseling, transportation, or you know, help you with cost negotiations for funeral home and the whole funeral process, and take some of the weight off a family when they are grieving, uh, instead of focusing and trying to get over what just befell them. They're out negotiating with funeral homes, this and that. There are companies out there that for as little as a little death benefit as $5,000 will provide you all those services so that you don't have to really do any heavy lifting. That could help a family, uh, I guess, better than they'll pay you out a check at Saji, and I think that's it. So now, I don't believe that it's it's a bad thing if it's what the only thing you can have. There are some people that they are they've had organ transplant. They're actively sick. They they can't qualify for anything. Register for Saji and get that, so you have something to offset the cost for the family. But it all ties back to when do you start? If we bring an elderly parent over to come live with us, one of the first things we should one of the first things we do is take them to the hospital, right? Get them checked. You know, why is it that we don't look at, okay, they are here now, let's see how we can get some protection in place and lock it in. They don't have to have a diagnosis and then we start scrambling around. I get those calls all the time. My dad or my mom, I want some policy for it, but Pius, I got to be honest with you, this and that is happening, and it's already too late. So that's how I feel about it. I still think people should look at their options. And if you absolutely have no options, by all means, get that. But I also think that for those who look at it as the only thing that they need to do for life insurance in North America, that's a little bit too short sighted. Uh, you know, we can provide some more education on that, provide some more support in being able to find and choose products that can actually be a protection product. You cannot be a breadwinner of the family and the only insurance that you have is Saji. That's uh, a little bit foolhardy.
So again, I think I would say maybe let's take 2 minutes and round up. And I think this is meant to
Absolutely.
lay foundation for tomorrow, which I think should be a more important piece, because I think it is important. And again, what we wanted to establish today as part of your financial planning, part of your financial investment, part of your financial whatever you have should
House.
include insurance, life insurance. And you can shop around for life insurance policies. There are different types. It's important. Bottom line, African Heritage Month, you want to celebrate the fact that you are African, you want to celebrate the might, the strength, all that comes with being African. If you are a man, you are above 40, you should be getting worried about your prostate. So go check it out, isn't it? And we have heard many people, I mean, suicide is becoming common in our community, isn't it? There are kids who are dying because of suicide. The pandemic brought in so much stress and all that. These are all things you can get insurance on, isn't it? Prostate, you have a life insurance policy. What happens when you die, or even while you are living, you're not able to take care of your bills, have a life insurance policy that's going to take care of that. Even if you have health insurance, isn't it? Health insurance is also very expensive. I mean, let's put that on the table. But insurance does not absolve you from getting life insurance. You can get health insurance and get life
Absolutely
insurance.
not. Actually, Lambert, you could actually max out on your health insurance. So it doesn't mean that they're gonna pay for everything um, till they pay the entire $1 million of your hospital bill and stuff like that. So they'll they will tap out. But it's not just the health. You may have good health insurance and have the treatment. Where do you get the income when you're in hospital to support your family and pay the bills? So that's another very important way to look at it.
So in all of this, we if you want something to take away from today, is just get a life insurance policy. That's all. Get a life insurance policy. But we want to set the stage for something more interesting tomorrow. And Pius, I think I figured out how to do the screen sharing. It's just to log in like me. I think we'll work that out for tomorrow. Tomorrow
Okay.
is about wealth, isn't it? All of
Yes.
us are looking for ways to build wealth. We want wealth for ourselves, wealth for our kids. How do we do that without doing a 9 to 5? How do we do that without getting through the cutthroat that you have to go job, isn't it? How do we do that? And life insurance presents a great opportunity to build wealth. Pius is going to break that down for us. Pius, in the last 2 minutes you have, do you have anything to say to close out today and to prepare for tomorrow?
Well, just to say thanks again for bringing me on and for us to have this conversation. It's always nice to share a little bit and shed a little bit of light on this very important issue in our community. I hope that uh, anyone listening got something that they could benefit from, learned something new, or got some form of clarification. Uh, I'm available if anybody needs any one-on-one questions, any particular things that came up that you want to reach out and uh, get more clarity on. I'll be happy to do that. I don't know. Uh, Lambert has my information. I don't know if you can how you can disseminate that, or if I'm allowed to go ahead and share that. But
Of course.
my my number is 832-573-7312. 832-573-7312. I'll be happy to help with any particular questions that you may have. And I'm looking forward to tomorrow because to me, the most exciting part about sharing today is the opportunity to be in the business that I'm in financial services with our insurance as a key aspect of what I do. Uh, for anybody looking for a part-time gig, you're welcome. You could start in here, and I'll just drop a little nugget. It's a recession-proof business to be in. So in the last 2 years, since the pandemic, the industry has seen an incredible increase in revenue that has not been the case in the last 30 years. So insurance sales were down 45% in 2014 compared to 1970. In 1970, our 17 million policies were sold a year, and in 2014, when it was last tracked, only 9.6 million policies were sold. But in the last 2 years in the pandemic, that number has jumped significantly. Also, just as a last fun fact, the number of adults in America that own a policy also dropped about 45%. It dropped from about 79% to 57% today. So there's a great opportunity to be able to bring knowledge to the market. And if you look around, I don't know if you've been to a car rental place, you've been at an airport, you've been in a restaurant, but service is horrible in America today. The last 2 years, I don't know what's going on. but nobody really cares about the quality of service. And one of the places, if you are the right person, you can come in and get some market share for yourself by performing great service, great education, is the financial services industry. And a great area to play in is the life insurance business. So thank you, Lambert, for bringing me again. Thanks everybody that was part of our show tonight, and looking forward to see you tomorrow and talk a little bit about some of the mechanics of the business.
So thank you, Pius. I know again, you and I have been going back and forth. We really did not plan out properly, but I'm glad we did this because we can disseminate this in different ways, just cut them out. But I think tomorrow is a great. I really wanted this to be a teaser and build that up to tomorrow, and we are going to build up. I think there's a different way of doing tomorrow's show, but I really wanted because honestly, I think there are at least 20 people who have talked to me about this same product, and I don't know. There's something about everybody wants to. There's different way of selling it.
You should,
There's something that
no,
needs
no, go
to
ahead.
work, and I think that it is important. There are many of us who have been sitting on the fence. There are many of us who are just old school people who just want to. We are, just contented with doing our 9 to 5 and maybe lying here at the end. It's time for us to maybe think outside the box. It's time for us to try something.
Absolutely.
And
Get
I
out of
think
your comfort zone, have some fun, man.
right. So I think that tomorrow you are comfortable in life. You just need something to try out something. Just try out. That's what I put it. Come on, let's try together. This is what a friend told me. He's a medical doctor. He's a surgeon, and he's in, I think it's Tyler, Texas, if I'm not mistaken, that village there. But he said,
Yeah.
I heard so much about this insurance thing. I want to try it for 1 year. I just want to go in and see for 1 year how this thing is moving. I'm going to bring him on tomorrow to tell us the experience. You'll be blown out by what he's going to say. But thank you,
Awesome.
Pius, and I look forward to tomorrow.
Wonderful. Thank you, Lambert. Bye, guys.